Hello traders, welcome to another episode of our tutorials. And in this video, I'm going to answer questions some of you have been asking for quite some time now. A few of you have been asking, Kofi, is that a way we can learn the forex market or we can trade the forex market without using any indicators, without using any tool? And that is what often people refer to as price action. And I think I have already explained what price action is all about. But whenever you say you want to learn price action, I understand what you mean, because all you are trying to say is you want to learn how to trade the market without indicators or tools. And that is what we're going to begin in this video. So simple put, you want to learn how to trade the market by looking at the chart, how you can actually trade, do your analysis by just looking at the chart and then making trade decisions. That is what we want to look at. So let's say that we want to look at price action, as you may call it. But like I said already, price action has a different meaning. Now, how do you trade the naked chart? As I will call it, trading the naked chart. That is how I will call it, but you can call it price action, which simply means without any indicator. Now, before you can do that, you need to understand certain things. And I'm going to take my time to explain them one by one, step by step. So in this video, we are going to cover one of them. Take your time and then watch this video to the end. I'm not going to rush at all because we are all learning. So I'm not going to be in haste or rush to make it look like I know too well, so I want to flex my muscles. No, we are learning over here. So in trading price action or trading the naked chart, by just looking at the chart and doing the analysis, the very first thing you will need, let me take you straight to the chart. And let me say that I would like to use the trading view for this tutorial. I've already told you how you can, or explain to you how you can actually set up your own trading view and use the free version as long as you want to use it. So this is the free version. This is mine. So I want to talk about the naked chart. So this is the chart. As you can see, there is no any indicator on it. It's just a plain chart. The time frame is 1 hour. Maybe if I put it on 4 hour, this is on 4 hour. Okay, this is on 4 hour. As you can see, it's just a clean chart. There's nothing like indicator or whatsoever on it. This is Euro JPY. Now, let me mute my camera so that you can see the full screen as I always want to do. Okay. So now the camera is muted. Now, when it comes to trading the naked chart as it stands now, or as you see it on the chart, you need to understand the basics. And the very first thing you need to look at is what we call the nature of the market. You need to understand what is meant by the nature of the forex market. Okay, the nature of the market. So today we are going to look at only this in terms of trading the naked chart. Once you understand this term here, the nature of the market, it will become easy for you. And that must be the beginning. What is the nature of the market? It simply means the behavior of the market, how the market behaves or how it moves or how it does its things. Once you understand how it does some things, you will come to appreciate how to take it up, or using that basis to take some decisions. And so the nature of the market simply means how the market behaves. How does the market behave? How does the forex market behave? If you take any currency pair, you should know how the market behaves. And it behaves across all the pairs. the same way. And it's been doing that since the beginning of Forex, not just the online, but the offline. It's been doing that since. So what is the nature of the market? Now, let me say that the nature of the market is this. Let me get a line and draw something for all of us. To me, the nature of the market, and not just to me, everyone knows that the nature of the market has two main things. And the very first thing is an impulse. An impulse. And then the next thing you will find in terms of the nature of the market is correction. So these are the two things you will find when it comes to the nature of the Forex market. The nature of the Forex market consists of these two: impulse and then correction. So what is an impulse and what is a correction? Now, an impulse simply means a higher momentum. A higher momentum is when the market is making maybe a move to the upside and it keeps going up, that becomes an impulse. Now, if it is also to the downside, you will see the market coming down and coming down one side, coming down. That is an impulse. Now, once you are able to spot these impulses, you will begin to see how the market will make sense. Let me take this thing off now. So the market is always making impulses, and I'll be showing you that very soon. What of correction? So after the market makes an impulse, it comes with correction. Sometimes there might be impulse, and then you see a correction. And then you see another impulse. I repeat, you see an impulse, you see a correction, and then an impulse. So the long side of the market, which you see becomes an impulse, and then the place where the market consolidates becomes correction. The place where the market consolidates becomes correction. So the market is always making impulses and corrections, impulse and corrections, impulse and corrections. And you will see this in all time frames. And it is as a, okay, let me bring this back. Sorry. It is as a result of these impulses and corrections that we are able to get what we call trend lines. And for you to understand what a trend line is, let me just show you. So the market is making an impulse to the upside, gives a correction, make another impulse, gives a correction, make another impulse. So once the market does this, then a trader will assume that based on this impulses and corrections, you are able to get two endpoints, which becomes a trend line. Now, how have you been able to get that trend line? You've been able to get a trend line from two corrected areas. So you got a trend line from the first correction area here. And then you got the second touch of the trend line from the second correction area here. So as a result of the corrections, you are able to get a trend line, just to give you an idea of where the market is kind of heading towards. So the market is always doing this on all time frames. On all time frames, you will see the market doing this. Now, let's go to the chart and see if we can see these impulses and corrections. We want to trade the naked chart, the chart without any indicator. You need to first know the nature of the market, and that is what we are doing now. Now, if I switch it to whatever time frame, let me zoom in or zoom out so that we can see this for ourselves together. Okay. Now, the market is always, if you even go back from here, look at it. The market is always making what? Impulse, correction, impulse, correction, 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 an impulse, a bit of correction, impulse, a big correction, an impulse, another impulse. So here becomes a big correction area. And then you look at it, you see another impulse. So look at it. You see another impulse and then correction. Correction, the whole of this becomes correction, an impulse, correction. Are you able to see that? Is it confusing? Okay, it will begin to make sense, don't worry. This is the exercise number 1 that you need to be able to do as a trader if you really want to trade price action. Now, let me just change the time frame. Like I said, you will find this on all time frames. So if I go to even daily, look at daily time frame. Let me zoom out so that you can look at this. Look at this for yourself. Wow. Just look at this for yourself. This is a big impulse. Let me show you the impulse. Let me use this, I think. This is a big impulse, correction, impulse, and then impulse, correction, impulse. Now the whole of this becomes a correction, a big correction. Now this correction, we see another impulse. See how the market is making its way up non-stop. Just as we saw here, look at it here too. The market started making its way all the way up here non-stop. That is an impulse, a big impulse here. And look at how this whole area has become so choppy. That is a correction phase. And then look at how the market broke out again with another impulse, a big impulse up to the side here. That is how the market behaves. Impulse and corrections, impulse and corrections, impulse and corrections. And like I said, you will find this on all time frames. This is daily time frame. Even if I go to monthly time frame, this is monthly time frame. Look at monthly time frame. You can always see this. It is always there. Look at it. This is it. See it? This is monthly time frame. So there are always impulse, a big correction here, an impulse, but not a big one. This becomes a whole correction. This whole part becomes a correction. Now the market breaks out with another impulse, making its way. Now within every impulse, you can find corrections if you study this, because there's an impulse here, there's a small correction here, and then another impulse. This is because it is higher time frame. This is monthly time frame. And these impulses you are seeing, sorry, these corrections that you are seeing within the impulses are for the smaller time frames. They are for the smaller time frames. So it depends on what time frame you are using, will give you what kind of correction or impulse you will see. So this is what it is. This is monthly time frame. You see the higher movement downwards, big movement downwards. And then the market makes a pullback, which is a correction. The pullback you are seeing here is a correction, and then another impulse to the downside. And even within this impulse to the downside, there's also another correction here. And even there's another small correction here. So those corrections you are seeing within the big impulse here are for smaller time frames, because the market is always doing that on all the time frames. So if you are not able, if I go to 15-minute time frame, this is 15-minute time frame. Let's see. Where is the market? This is it. Good. Let me zoom in a bit. So you see the smaller time frames. This is Euro JPY on 15 minutes. And if you look at it, you always see the impulse and corrections. Look at it. You always see the impulse and corrections. Look at it. You see it? This is a big impulse. And within this impulse, there are impulses and corrections. If you watch, they are for smaller time frame, like the 5 minutes and then the 1 minute. And then there's another impulse to the downside. Now, this whole impulse back to the downside here becomes a correction, because after the breakout of this, so that is how people are able to draw what they call trend lines. If you are drawing trend line, somebody will be tracing this as a correction. You'll be tracing this as a correction. And once the market breaks out of this correction, it goes in with a buy, because he has seen an impulse here, and there's a correction which is making itself look like another impulse, but not an impulse, but a correction. So once this correction is broken out, so the person draws a trend line on that correction, hoping that it will be broken. So he gets a trend line here on this correction. Okay. He gets this done here like this. And then he's watching for a break. Once the break happens, or he draws this, watching it as a big correction. And once the correction is broken, he takes another buy. Why? Because he saw an impulse here, and the market is trying to behave like another impulse here, but it is just correcting itself. And after that correction, we have seen a breakout of it and another big impulse to the upside. And then we are seeing another correction here. And then there's also a breakout of that correction to the upside. And then there's also another correction here, a breakout of that again to the upside. Look at it. You see it? And it continues. So it is good for you to be able to know what phase of the market we are in, whether we are in an impulse or a correction phase. If you are not able to identify this nature of the market, because after a breakout here, it gives another big impulse. And then we are seeing another big correction here, which is broken out with another smaller impulse. But this one is not too huge, a small one. Now, if someone is going to draw a trend line, this is how the person will draw the trend line. He's going to use the two most recent correction areas as a trend line. So once that is broken, then the person assumes that this is 15-minute Euro JPY. So once it is broken, as it has done here, then the person assumes that the trend line is broken. As we can see here, you see it? The trend line is broken. So if the trend line is broken, if I take it off and I use this over here, okay, come on. Yes. Now, Once this line is drawn on two correction areas, this is one correction area. This is also another correction area. So he gets a trend line there. Once this trend line is broken, you are expecting the market to come back to correct itself and touch or come closer to the level at which the market broke. So if it comes back to that level and it is making its way down, then you will mark that correction area down. You will mark that correction area down, which becomes something like this. Once the market comes out of that correction area, then the person takes a sell because he knows that it will go down. Anyway, we haven't gotten there yet. I don't want to rush this for us to go too far, but I want you to be able to identify impulse and corrections. Impulse and corrections. I want you to do this exercise. Take every pair. Let me take a new pair. Which pair should I take? Maybe Euro AUD. This is Euro AUD. Okay, 15 minutes. This is the 15-minute chart on Euro AUD. So you should be able to do this exercise. Look at the market. Look at the faces. Impulse, a big correction, an impulse. There's a minor correction here, an impulse, correction, an impulse. And then from here going, the market forms a pattern. We haven't come there yet because we'll be looking at patterns in terms of price action. So when it comes to the patterns, I am seeing some pattern here. The market gives a pattern, head and shoulders. Once that pattern is formed, the person sees watching the trend line to be broken. The person is just watching the trend line to be broken comfortably. So two ends. So which is this correction area versus the last correction area, which is here. These are the last two corrected areas. If you look at it, so the person is just watching those two corrected areas. So he forms a trend line. Now, the market breaks this trend line after the head and shoulder pattern. Breaking the trend line comes back to the level of where the trend line is broken. And now what the trader is watching is the correction that has been formed here. Once this correction is broken out, you take a sell here. And if that happens, from where we are to this level, if the person had taken a trade, what would have been a sell profit? Let's look at it. It takes a sell here, and then look at where it came up to. How many pips? This is 117 pips. And so you put your stop loss at the end of where the trend line is broken. So the stop loss, maybe this color is not too good. Let me change it to maybe red. Good. So he gets this, he does this, and look at it. Because he has put in the trade on the corrected area that got broken. Because already this is broken. So he takes a sell here, and look at it. There's a stop loss of 34 pips, and then he makes a total profit of what? 117. And if you look at this trade, there is no back upward. The trade has not gone back up. He gets a perfect entry, and then he descends and gives you the profit. So before you can be able to get here, now we'll get to other areas for us to know how we can do this trend line and other stuff. But I just wanted you to know that it is good for you to be able to identify the impulses and then the corrections. If you can be able to do that, it will save you and give you the basis of this Forex market thing that we are doing here at the moment. So I demand that we all go through this and then do this exercise. Now, after this exercise, this impulse and correction exercise, which has to do with the nature of the market, after this exercise is done, the next thing we'll be looking at is the structure of the market. The structure of the market. And trust me, the structure of the market will make things even more clearer. The structure will make things more clearer. But today I have just talked about impulse and corrections, which has to do with the nature of the market. So I want you to go back to the chart, whether you are going to do this on the MetaTrader or the MT4, MT5, or you will do this on the, what do you call it? The trading view. For me, I would love that you use the trading view for this exercise, because the trading view, just like I was doing, you can be able to drag. If I take you back to the trading view, you can be able to drag, you see, drag the market and do whatever you want to do. But on the MT4, when the market is closed, you can do that. But if the market is opened, you cannot do that. You cannot drag in and out and see whatever. If the market is closed, you cannot open, you cannot do it on the MT4. But on the trading view, whether the market is open or closed, you can always do this by dragging back and forth and then doing whatever you want to do. So I have already talked about how you can customize this trading view. It's part of the tutorial videos here on this channel. So just go to the description of this video. You will see Forex trading for beginners. That is the name of the playlist, or you see playlist. There's a link, click on that. It will take you to the total playlist. And once you begin to watch these tutorials, I am sure you will find your way out, because that is what we want to be able to help everybody to do, to be able to find your way out. So do this exercise. Now, those of you who are not going to watch this video to the end are going to miss this. Let me just show you something, one more thing, which I may not talk about again. This is just a bonus. Let me add it. Now, in case the impulse and correction thing is going to be difficult to identify, there is also another way you can do it. You can put your chart on line chart or linear. Now, when you put your chart on linear, it will help you to be able to identify this impulse and corrections. This is linear chart. You see it? This becomes an impulse. Where is my tool? Let me pick it. This becomes what? An impulse, correction, impulse, correction, impulse, correction, impulse, impulse back, corrections. You see it? So yes, if you switch to the line chart, this is on 15 minutes. Let's say 1 hour. You see the 1 hour chart? You see it? On the 1 hour chart, it gives you a better picture of the impulse and corrections. So those of you who will not watch this video to the end will miss this one. That's why I always say watch my videos to the end, because you don't know the last thing I will say to end this video. So you see it? This is line chart. With the line chart, this is an impulse. This is a correction. Once the correction is broken, you have another impulse, correction, impulse. So this whole thing here becomes a big impulse, a correction. Sorry, a correction. This becomes an impulse, correction, an impulse. And then this is where you have the head and shoulder pattern that I showed you. And then with this, you can even draw your trend line. You can draw your trend line. Look at it. To be so nice. This is your trend line. So once this is broken, you have it. You are waiting for another impulse. Once the trend line is broken, you are waiting for another impulse. So before you get that impulse, you need to get correction. So a correction is formed here, and that correction is broken. So it gives you an entry straight forward. It gives you, once the correction is broken, you get your entry there straight forward. And this becomes your entry. Straightforward. This becomes your entry, and your stop loss becomes the end of the correction, which is here. And then your take profits, you can decide. And look at it. You see it? This is how you can also use the linear chart to help you get the impulses and then the corrections. It's based on these impulses and corrections that will help you to be able to draw your trend line. And that will be able to help you to get to the next thing, which we call the structure of the market. So in my next video, just as I have promised, we will be talking about the structure of the market. So today, under price action, which you may call it, or the naked chart trading, which I will call it. The naked chart is like, that means there's nothing on it. Okay, you want to trade without anything on the chart. So under that, the very first thing you need to know is the nature of the market, which has to do with impulses and then corrections. Once you can identify this by doing a lot of exercise, do more exercise. I want to take my time to help you out. Do more exercise. The next video will be the next layer you will need after the nature. So take notes, write it somewhere. The nature of the market and the price action, which is the naked chart trading. You need what we call 1, the nature of the market. The next thing you will need is the structure of the market. You may not find this on any channel. You will find it here. So we'll be doing the structure of the market just as we have done the nature of the market. And with the structure of the market, you will come to understand that what you call support and resistance is kind of different in terms of the nature of the market. That is why a lot of you do support and resistance and it is not working. Because the way you understand support and resistance is different. And it is different because you don't understand the nature of the market, which we have just done. If you understand the nature of the market, which has to do with impulse and corrections, then you will come to understand that sometimes where you even think that it is a support, it's not support. Yes. But I won't rush. You will come to understand that in the nature, sorry, in the structure. When we come to the structure of the market, you come to understand that the way you see support and resistance, that shouldn't have been the way it should be. But you come to understand that if you understand the nature of the market, which we have just done today very well. So do a lot of exercises. Look at it and see if you can be able to get this nature whatsoever. You'll be able to do this impulse and corrections. Do a lot of that exercise on all time frames. Okay, do that on 1 hour, on 15 minutes, 30 minutes, 4 hour, daily, all the time frames. Try and see if you can be able to find these impulses and corrections. And then in my next video, we will go to the structure of the market. I'll see you in the next video. Please subscribe. I want before this year ends, we should get to 5K subscribers. I need 5K subscribers by the end of this year. So you can help me get there. And one of the ways you can help me get there is by liking our videos and also subscribing to our channel. Like our videos and also subscribe to the channel. And that will help us to get there. Now, let me announce this finally at the end of this video. A lot of you want me to help you with mentorship, but you have difficulty in raising $100. Yes, a lot of you want to learn or you want me to help you in mentorship, but you have some kind of difficulty in raising the $100, which is the fee. Now, I want to do this. I want to help you. I just want to help 10 people. 10. I repeat, 10 people. 10. I want to be very honest. 10 people. 10. 1 0, 10. And so this is what I want to say. I want to give that $100 to you and then say that, okay, I'm dashing you $30 out of it. and then you pay only $70. I repeat, you will pay only $70 for the mentorship. And I need 10 people. I am going to create a group for the 10 people that are ready to pay the $70 for the mentorship. And I'm going to do the mentorship at a go for all of you. So it's going to be a group mentorship for only the 10 people. It's going to be a group mentorship for only the 10 people. So once I get the 10 people, I'm done. So please, it's going to be a group mentorship for the 10 people, and it is $70. First come, first serve. Once I get the 10 people, the price goes back to $100 per mentorship. So go to the description of this video, or you can chat me one-on-one because you already know how to get in touch with me. When you watch other videos, I have given my contact and other things. But I'm going to leave a link. The link is just going to be for 10 people. It's a Telegram link. Once 10 people join that group, it means those 10 people are ready to make payments for that group mentorship. So go to the description of this video. You will see mentorship, and then there's a link below it. Mentorship with a link. That is, if you are ready to pay for the $70 for that mentorship, you click on that link and join the group. When you join the group, you will make payment. Once payment is made, and I get the 10 people, we will start the mentorship training immediately. So $70, it's not $100, but $70 for the 10 people. And I'm going to do this in group. For the 10 people in group, it's going to be group tutorial. So if you are interested, I have only 2 strategies, and that is what I want to give out to you by teaching you those strategies. Okay, so that is what is, that's $70 for the mentorship. So click on that link, go to the description of this video, you will see mentorship, and then there's a link below the mentorship. Click on that link and join. So like I said, it's first come, first serve. I'm going to limit the group to only 10 people. So once you click on the link and it tells you that the group is full, then it means I have gotten the 10 people. Once you click on that link and it says the group is full, because I'm going to limit the group to only 10. So the first 10 people to be in that group, it ends there. All right. I just don't want to discriminate or kind of favor one and leave one. The first 10 people, I'm done. So if you're ready with your $70 to be part of this group mentorship, just click on the link and join, and then make your payment. Once you make your payment, we are good to go for the 10 people. I will see you again another time. Until then, take care of yourself.